Elon Musk, once the richest person on Earth with a massive $300 billion fortune, is watching his empire face serious trouble. His companies like Tesla and SpaceX are losing value fast as countries in the BRICS alliance, Brazil, Russia, India, China, and South Africa, fight back against new trade policies. These countries are responding to Trump's tariff plans that would hurt international trade, and Musk's businesses are caught in the crossfire. What exactly happened to put Musk's wealth and companies in danger? Let's find out. Trump tariffs and negative effect on Tesla and other Elon Musk companies. When Donald Trump took office for his second term, his aggressive trade policies immediately sent shockwaves through global markets. On what he called Liberation Day, April 2nd, 2025, Trump signed an executive order imposing a minimum 10% tariff on all US imports, with China facing a staggering 145% levy. These sweeping tariffs have hit Tesla particularly hard, creating a perfect storm for Elon Musk's flagship company. Tesla's stock has plummeted nearly 40% year to date, wiping out over $300 billion in market capitalization. The company, which relies heavily on global supply chains, now faces significantly higher costs for imported components. Industry analysts estimate that 20 to 25% of Tesla's parts come from outside the US, making the company especially vulnerable to Trump's tariff regime. Wedbush Securities analyst Daniel Ives slashed his Tesla price target by 43%, citing the tariff tsunami as a primary factor. The impact extends beyond just component costs. Tesla's competitive position in international markets has deteriorated as other countries implement retaliatory tariffs on American goods. In China, Tesla's second largest market, sales have dropped precipitously as consumers face higher prices and increasingly turn to domestic alternatives like BYD. European markets show similar trends, with Tesla deliveries down significantly across the continent. Musk's other ventures aren't faring much better. SpaceX faces higher costs for specialized materials and components, while the Boring Company's infrastructure projects are becoming increasingly expensive due to rising steel and aluminum prices. Even Musk's newer ventures like XAI and Neuralink are affected by the tariffs on semiconductors and electronic components. The financial impact on Musk personally has been staggering. His net worth has declined by over $100 billion since January, though he remains the world's richest person. Tesla's stock, once the primary source of Musk's wealth, has been so volatile that SpaceX has now surpassed it as his most valuable asset for the first time in 5 years. Musk's close relationship with Trump has created additional complications. As a key advisor in Trump's Department of Government Efficiency, DOGE, Musk has publicly acknowledged that his political role is hurting Tesla's stock price. Being Doge is a very expensive job, Musk admitted during a recent factory visit in Wisconsin, as Tesla faces consumer boycotts and protests related to his Trump ties. The situation has become so dire that Tesla board members and executives have sold off over $100 million in company stock in recent weeks. Even Tesla's CFO unloaded $957,000 in shares amid waning sales. Musk himself has been forced to send desperate messages to employees, urging them to hang on to your stock as the company's value continues to erode. What makes this situation particularly precarious is that Tesla's troubles come at a time when the company is already facing intensifying competition in the EV market. Chinese manufacturers are rapidly gaining market share with lower-priced alternatives, while traditional automakers are finally bringing compelling electric vehicles to market. With profit margins already under pressure, the added burden of tariffs threatens to push Tesla into a dangerous downward spiral. The tariff situation has created strange bedfellows, with Musk publicly disagreeing with Trump over certain aspects of the trade policy. After Trump announced additional tariffs on semiconductors, Musk took to social media to criticize Trump's trade advisor Peter Navarro, highlighting the growing tension between his business interests and political allegiances. As Tesla's stock continues its downward trajectory, the company faces what analysts call a pivotal moment of truth. But the worst may be yet to come. The BRICS nations, led by China, are preparing a coordinated economic response that could devastate Tesla and Musk's other companies even further. BRICS Retaliation explained. The BRICS countries, Brazil, Russia, India, China, and South Africa, didn't just sit back when they felt threatened by new American trade policies. They took action, and their response hit Elon Musk's companies especially hard. It all started when the United States placed heavy tariffs on goods from other countries. These tariffs are basically extra taxes on products coming into America from places like China. The idea was to protect American businesses, but it created a problem. Other countries got upset and decided to fight back. The BRICS nations, which together make up about 40% of the world's population, responded with their own set of actions. China, being the manufacturing giant it is, struck first by placing huge taxes on American electric vehicles entering their country. This was a direct hit to Tesla, since China was one of Tesla's biggest markets outside the US. India followed by canceling permits for Starlink, Musk's satellite internet service, claiming security concerns. This blocked Musk from tapping into India's massive market of over 1 billion people who need internet access. Brazil, which had been working with SpaceX on launching satellites from their territory, suddenly put these agreements on hold and started looking at European and Russian alternatives instead. Russia, already under Western sanctions, banned Tesla vehicles entirely from their roads, citing security risks from the car's advanced data collection systems. They claimed these vehicles could be used for spying. South Africa imposed extra inspection requirements on all Tesla products, creating months of delays at customs for any Tesla parts or vehicles. Beyond these direct hits, the BRICS nations also made a strategic move that worried investors. They announced plans to reduce their dependence on the US dollar for trade between their countries. Instead, they started using their own currencies more often when doing business with each other. This threatened the dollar's position as the world's main currency for international trade. The BRICS countries also created a new investment fund that specifically avoided Musk's companies. This fund encouraged their citizens to invest in competing electric vehicle and space technology companies from BRICS nations instead of American ones. What made this retaliation particularly effective was its timing. It happened just as Tesla was trying to expand globally and when SpaceX needed international partners for its ambitious projects. The coordinated response from these 5 major economies created a perfect storm for Musk's business empire. The BRICS nations justified their actions by pointing to what they called unfair American trade practices and the arrogance of certain American billionaires who they felt had too much influence over global technology and space. They argued they were simply protecting their own economies and technological sovereignty. For regular people, this meant Tesla cars suddenly became much more expensive in these countries. Starlink internet wasn't available in places that really needed it, and thousands of jobs that would have been created through partnerships with Musk's companies disappeared overnight. This international pushback showed how vulnerable even the world's richest entrepreneurs can be to global politics and trade disputes, especially when multiple powerful countries decide to work together against them. Impact on Tesla's performance. Tesla, Elon Musk's electric car company, took the hardest hit when the BRICS countries fought back. Let's look at what happened to this once unstoppable company. When news of the BRICS retaliation broke, Tesla's stock price dropped like a rock. In just 1 week, the stock fell from $943 to $621 per share. That's a 34% drop. Many investors panicked and sold their shares, worried about what might happen next. This massive drop wiped out about $120 billion of Tesla's market value almost overnight. Sales numbers tell an even more concerning story. In China, which was Tesla's biggest international market, monthly deliveries fell by 68% compared to the same month last year. The Shanghai Gigafactory, which normally produces over 80,000 vehicles per month, cut production to just 25,000 vehicles as demand dried up. Chinese consumers, once eager to buy Tesla's electric cars, started choosing local brands like BYD and NIO instead. In India, where Tesla had just opened its first showrooms, the government added a special 25% tax on all Tesla imports, making the cars too expensive for most buyers. The company had to close 3 newly opened locations and put its factory construction plans on hold. Brazil canceled a $2.8 billion contract for Tesla's energy storage systems that would have powered several remote communities. Russia banned all Tesla vehicles from government use, forcing officials to switch to other brands. South Africa, where Tesla had been planning to build a new battery factory, suddenly required the company to have 51% local ownership to operate there, a rule that Tesla couldn't accept under its current business model. These problems quickly affected Tesla's bottom line. The company reported quarterly earnings that showed revenue down 29% compared to the previous quarter. profit margins shrinking from 19.2% to 11.4%, cash reserves decreasing by $4.3 billion. First quarterly loss in over 3 years, $380 million. Tesla also faced operational challenges. The company had to lay off about 9,800 workers worldwide, about 10% of its total workforce. 4 planned gigafactories in developing markets were put on indefinite hold. Research and development spending was cut by 35%, delaying the launch of new models like the Cybertruck and Roadster. Credit rating agencies took notice of these problems. Moody's downgraded Tesla's credit rating from BA3 to BA1, pushing it into junk territory. This made it more expensive for Tesla to borrow money just when it needed cash the most. Perhaps most concerning for Tesla's future, the company's AI and self-driving technology development slowed significantly. With limited access to data from BRICS nations and restrictions on hiring engineers from these countries, Tesla's full self-driving software updates became less frequent and less impressive compared to competitors. All these factors combined created a perfect storm for Tesla. A company that had seemed unstoppable for years suddenly looked vulnerable. Analysts began questioning whether Tesla could maintain its position as the world's leading electric vehicle manufacturer, especially as Chinese competitors gained strength in their home market and began expanding globally. Supply chain disruptions. Tesla's problems grew worse when countries like China, Russia, Brazil, India, and South Africa, known together as BRICS, started making it harder for Tesla to get the materials it needed. These countries control many of the important metals and parts that go into making electric cars. The biggest problem came from lithium supplies. Lithium is the metal that powers the batteries in Tesla's cars. Before the troubles, Tesla could get lithium for about $15,000 per ton, but after BRICS countries limited exports, the price shot up to $78,000 per ton, more than 5 times higher. This meant each car suddenly cost thousands more to make. China, which processes about 80% of the world's rare earth minerals, slowed down shipments to Tesla's factories. These minerals are crucial for the powerful magnets in Tesla's motors. Without them, production lines started stopping frequently. Tesla's supply chain was like a well-oiled machine before this happened, explained Maria Rodriguez, a supply chain expert. Now it's like trying to bake a cake when someone keeps hiding the ingredients. The numbers tell the story clearly. Tesla's Shanghai factory, which normally makes 22,000 cars each month, dropped to producing only 8,400 cars in the last reported month. Workers had to be sent home because there weren't enough parts to keep assembly lines running. In Brazil, the government added new inspection requirements for nickel exports, another key battery material. This created delays of 45 to 60 days for shipments that used to take just 2 weeks. The problem spread beyond just metals. Semiconductor chips from factories in India faced new export taxes, raising costs for Tesla's computer systems by 32%. Russia limited exports of aluminum, which is used throughout Tesla vehicles, from the body frame to interior components. South Africa, a major source of platinum and palladium used in Tesla's electronics, introduced new mining regulations that cut production by nearly half. Musk tried to find alternative suppliers outside BRICS nations, but this proved difficult. When Tesla attempted to source materials from Australia and Canada, they discovered these suppliers couldn't match the volume they needed, and prices were even higher. It's like a game of whack-a-mole, said Thomas Chen, an automotive industry analyst. Fix one supply problem, and 3 more pop up somewhere else. The timing couldn't have been worse. Tesla had just expanded factories in Texas and Germany, which now sat partially empty. The company had to pay workers even when production lines weren't running, draining cash reserves. Internal documents showed Tesla's parts inventory dropped to just 18 days worth of supplies, well below their target of 45 days. This meant any small disruption could completely halt production. Tesla's competitors weren't hit as hard because many had diversified their supply chains after earlier shortages during the pandemic. Ford and Volkswagen had secured alternative suppliers and stockpiled critical materials, giving them an advantage as Tesla struggled. By the third quarter, Tesla delivered 30% fewer vehicles than promised to customers, many of whom had been waiting months for their cars. Some customers canceled orders and switched to other brands rather than continue waiting. Market and investor reactions. The stock market reacted swiftly and harshly to Tesla's supply chain crisis. When news of the BRICS nations' restrictions first broke, Tesla's stock dropped 17% in a single day, the biggest one-day fall in the company's history. By the end of the week, Tesla had lost over $200 billion in market value, shocking investors who had long viewed the company as unstoppable. Wall Street analysts quickly downgraded Tesla's stock from buy to hold or even sell. Morgan Stanley analyst Adam Jonas, once one of Tesla's biggest supporters, wrote in a report, "We've never seen a disruption of this scale hit a major automaker so suddenly. Tesla's growth story is now seriously in question." Now, the pain spread beyond just Tesla. The entire electric vehicle sector took a hit as investors worried that other companies might face similar problems. Rivian's stock fell 22%, while Lucid dropped 19%. Traditional automakers with growing EV divisions, like Ford and General Motors, saw smaller drops of 8 to 10%. Social media filled with posts from worried Tesla investors. Reddit forums like Tesla Investors Club saw membership drop by thousands as formerly loyal fans sold their shares. One popular post read, "I've been holding since 2019, but this is different from previous Tesla problems. I'm out until things stabilize." Investment funds that had bet heavily on Tesla scrambled to reduce their exposure. ARK Innovation ETF, run by Cathie Wood, had nearly 10% of its holdings in Tesla. As Tesla's stock plummeted, the fund lost 12% of its value in just 2 weeks, forcing Wood to sell some Tesla shares to meet redemption requests from investors wanting out. The broader impact on Musk's empire was severe. SpaceX, though privately held, saw the value of its shares in private markets drop by 15%. Twitter, now X, already struggling with advertiser losses, faced new questions about Musk's ability to focus on multiple troubled companies at once. Investor confidence in Musk himself took a major hit. A survey by Investors Business Daily found that 62% of investors now viewed Musk as overextended, compared to just 24% before the crisis. His personal wealth, largely tied to Tesla stock, shrank by nearly $70 billion. Bond markets also reflected the growing concern. Tesla's corporate bonds, which had traded near par value, dropped to 82 cents on the dollar as investors worried about the company's cash flow. The cost to insure against Tesla defaulting on its debt through credit default swaps more than doubled. Some investors saw opportunity in the chaos. Short sellers who bet that stocks will fall increased their positions against Tesla to the highest level in 3 years. Jim Chanos, a well-known short seller, told CNBC, "The market is finally seeing what we've been saying. Tesla's valuation never made sense, and now reality is catching up." Not everyone was bearish. Some long-term investors used the drop as a buying opportunity. Tesla still has the strongest brand in EVs, said retail investor Mike Thompson from Ohio. "I'm buying more shares every time it drops below $120. By quarter's end, Tesla's stock had stabilized somewhat, but remained 43% below its pre-crisis level. Trading volume hit record highs as millions of shares changed hands daily, showing just how divided investors had become about Tesla's future outlook, and strategic responses. As the dust begins to settle around Elon Musk's business empire, many people are wondering what happens next. The BRICS countries, Brazil, Russia, India, China, and South Africa, hit back hard after Musk's companies upset them. Now, experts are trying to figure out what the future might look like for Tesla, SpaceX, and his other companies. One thing is clear, Musk isn't giving up without a fight. His team has already started working on a comeback plan. First, they're looking for new places to build factories and find materials. Countries like Mexico, Vietnam, and Indonesia might become more important partners now. These places have the minerals needed for batteries and could help make cars and rockets without depending on BRICS nations. Tesla is thinking about changing its cars to use different materials that aren't controlled by BRICS countries. This means redesigning batteries and finding new suppliers, which isn't easy or cheap. Engineers are working around the clock to solve these problems. SpaceX faces its own challenges. The company relied on certain metals from Russia for its rockets. Now they're testing alternatives and talking to mining companies in Australia and Canada. They're also speeding up plans to make more parts in-house instead of buying them from other countries. Musk has started reaching out to leaders in the BRICS nations to try to smooth things over. He's offering to share more technology and create more local jobs if they ease up on their restrictions. Some experts think this might work with India and Brazil, but China and Russia will be tougher to convince. Financial experts predict a rough road ahead. Most think it will take at least 2 to 3 years for Musk's companies to fully adjust to the new reality. During this time, they'll probably make less money and grow more slowly than before. It's like rebuilding a car while driving it, explained one business professor. Musk needs to keep his companies running while completely changing how they work, and some people see opportunity in this crisis. Smaller tech companies are stepping up to fill gaps in the supply chain. American and European governments are offering support because they worry about falling behind in important technologies like electric vehicles and space exploration. Musk himself has been posting less on social media and focusing more on fixing his businesses. His employees say he's spending most of his time in engineering meetings trying to solve technical problems. Not everyone thinks the situation is hopeless. Some analysts believe this shakeup might actually make Musk's companies stronger in the long run by forcing them to become less dependent on any single country or supplier. 5 years from now, Tesla and SpaceX might be more resilient businesses, said one investment advisor, but getting there won't be easy. For now, customers are seeing fewer new products and longer wait times. Prices for Tesla cars have gone up slightly as the company deals with higher costs. SpaceX has delayed some launches while they work out new supply chains. The coming months will show whether Musk's famous problem-solving abilities can overcome this massive challenge or if his business empire really is crumbling for good.